Hello, it's Robert Miner with Dynamic Traders Group with this week's brief DT trade strategies for the week beginning July 27th, this coming Monday. If you like what you learn here, check out dynamictraders.com. Our DT report's a 1-month trial where you get daily updates, weekly videos, weekly trade tutorials, and every other week we even have a DT report subscribers webinar meeting online together. So you get an awful lot of content for that price with one of our DT reports. And as usual, I'm going to begin this with keep in mind we want to learn to trade, not forecast. So we identify technical conditions with a high probability outcome and then a specific low risk trade strategy to take advantage of those conditions. That's going to really be evident with the two markets we look at today, because the same two markets I looked at 2 weeks ago. Last week I didn't have a video up because it was my vacation week, of which two markets 2 weeks ago were in a position to make a reversal, but they never triggered it. That's the difference between forecasting and trading. So you want to learn to trade, not forecast, and then you want to learn specific trade strategies with low risk, low capital exposure. So keep that in mind. We're traders, not forecasters. Let's take a look at two of our favorite markets to trade, and that is the stock indexes, primarily the ES or the S&P, bull and bear ETFs, as well as the metals, which have a screaming couple of weeks the last 2 weeks. And let's see if maybe there's a change coming next week. Well, this is the ES daily data. I'm going to put my cursor on 2 weeks ago when I made the video 2 weeks ago. It's right here on this day. It's Friday, July 10th. And in that video, we identified the potential that the S&P or the ES had made an ABC correction. It was in a position to have made an ABC correction, and so we could develop go short strategies. Now keep in mind, listen to my language. It was in a position to have completed an ABC correction. It was at a retracement zone. The daily momentums had made dual look back bear reversals, and the market had been sideways since that bear reversal. But did it trigger a trade? And the answer to that is no, it didn't trigger a trade following that Friday video. So that's why you have to have trade strategies. We can see the next trading day on Monday, a real wide range reversal day. Look where our momentums are though. That's not making a bear reversal from overbought zone. It's almost, hadn't made a bull reversal yet, but the fast line had reached oversold. We were near a momentum low, not the time to initiate a short trade when you're within a bar or two of making a momentum low on the daily data. And of course, the next day we made the bull reversal and it's been up since then. But now look where we're at now. I've got my cursor on Thursday. That's an outside 3 close bear reversal day. 3 close means it's a reversal day and it closed below the closes of the past 3 days. That's usually a pretty significant reversal signal if we're at timing, if we're at price and pattern and momentum, that sort of thing, to complete a reversal. And it's a potential 5-wave advance from there. We were at that 5 and 6 day reversal cycle on that day. That was day number 6. And you can see from going back to the June low, really every 4 to 6 days, by day 6, we make a reversal that lasts, sometimes it's only 2 or 3 days. But that happens sometimes only sideways. It's not necessarily a big correction. But here we were, made 3 close reversal. We were in the end of wave 5 target zone, 127, 162% external retracement of the potential wave 4. I don't know. This is kind of a sloppy wave count. We're not going to worry about that. We just want to know that we were in a position. Also, daily momentums were dual look back overbought, made the reversal on that day. So on the close was the specific trade strategy that we had was to go short on the close if the close was below actually this Tuesday close, and of course it was. It was actually below the Monday close, and we made the bear reversal. So we had a well-defined capital exposure for either a futures trade, an options put trade, or whatever a net short trade is, or ETF, bearish ETF. There's lots of choices on those as well. Had a little follow through on Friday, and the daily momentums are bearish, so more than likely we've got another 2 to 3 days sideways to down. So as I mentioned to our subscribers when we're setting this up and recognized we were near that reversal time, was that more than likely this is going to be a daily high, not a major high lasting weeks by any means, but a probably daily high. It'll be a good short trade for 3 or 4 days, 5 days, something like that, more than likely. It may morph into a 1 or 2 week high, but we're not necessarily looking at it to be anything major other than a trading high. And that's what it's been so far. And we should be, again, Tuesday's 100% low to low to low. And I don't have these marked off here, but that's 10 days to that low, another 10 days. And Tuesday is day number 10. So right around Tuesday and Wednesday, we're probably going to make another daily low if the ES or the S&P continues sideways to down as anticipated. So this is what I mean is by we don't make forecasts, we identify trade opportunities and then specifically what the market has to do to make a reversal and to confirm that reversal. So that's what we're looking at for the S&P over the next few days. Let's take a look at gold and silver. Well, now let's take a look at silver and gold and the GDX for that matter, all three of them. They're all three moving together and reaching a critical juncture. I'm going to put my cursor right here. That was 2 weeks ago on Friday the 10th when I made the last video and showed you how we're at the typical target the day before, this reversal day that was made the day before, a typical target for an end of wave 5. And with the potential for completing not just end of wave 5, but a weekly high as well. And of course, Friday was an inside day, as I described. Inside days are not days that are technically significant. You ignore those. So we would need some follow through the following day for a specific trade strategy to go short. And again, we're looking to trade, not to forecast. Of course, the next day popped up significantly to a new high, went sideways for several days, and without making any reversal signal, and then made a bull reversal into a daily momentum. And of course, this past week had this really sharp spike up. So again, it's trade strategies that are important. I just want to bring to your attention now is that this coming week is the maximum week probable. We'll look at some weekly data in a minute. Probable to complete a weekly high and a wave 5 high as well. 2 time factors were on the 21st. These are just daily time factors, but the 24th, which was Friday, was a very significant one, and that's the low to high. That is typically the maximum, at least within a bar or two, the maximum of when we would have the next reversal, in this case, an end of wave 5 reversal. So that came on Friday. So far, the high was on Thursday. And again, what do we have here? Friday. What is it? Every Friday we have inside days. So we made a reversal day on Thursday. We did make a bear reversal in the daily momentum on Friday, but again, it's an inside day, it doesn't count. So we would have to have follow through with a trade below Thursday's low and a lower close on Monday for the confirmed reversal signal on Monday. However, we do have a significant weekly time factor to this next week. So we're potential, if we do go higher, I just want you to be aware this 100% alternate price projection is a 100% alternate price projection of the net ranges of waves 1 through 3 projected from the wave 4 low, typically the maximum even for a wave 5. And again, who's buying here? Who's fueling this? I can guarantee you it's the small trader, the amateurs, the not profitable traders. They're getting in on a speculative panic buying spree at the end of a 5-wave trend. And I suspect we're going to see silver turn around pretty sharply next week. Again, that's supposition. It's not trading. The trade strategy is we need to trade below Thursday's low and close below Friday's close, at least, on Monday for the initial signal that we made that reversal. And if you want to do the safest time to enter on the short side, at least, is we do what we called, it's a WD Gann teaching is the safest time to enter is on the initial correction to the new trend. In Elliott wave terms, that's on a wave 2 or wave B correction. And when we have speculative blow-offs like this, that's what we'd wait for. But if you're long, I just want you to be aware that there's some significant time, significant price, momentum, dual time frame momentum and pattern to complete this top, if we didn't complete it on Thursday, to complete it next week. Here are the two key weekly time factors. Again, the simple high to high to high, and that's the 7 week. That was this past week. And just look, every 7 weeks since January, we've made a weekly high. 7 weeks, 7 weeks, another high, 7 weeks. Sometimes these highs only last a couple of weeks, but when we're in the fifth section up, it's probably going to last more than a couple of weeks. And last week was week 7, and next week is on the weekly basis is the low to high. And again, maximum time before you complete a weekly high. Weekly momentums are in the third bar or third week of being dual look back oversold, or excuse me, overbought. Usually we make that high in reversal within 4 bars. Gold is in substantially the same position. We had looked at gold a couple of weeks ago, right around here for a potential high. Again, we just went sideways. We never had that confirmation of a potential high here. Well, now we've gone up right in what would typically be considered the probable maximum on the upside. This is a couple 100% alternate price projections, a real clearly wave 5, and a speculative blow off again. The turnaround is probably going to be pretty brutal, and we've driven the weekly and daily momentums to extreme overbought for dual time frame momentum setup to complete the high. Here's the GDX. If you happen to be long mining stocks, just be aware they've reached the significant end of wave 5 target zone, if this is a 3 and a 4, and the weekly momentums are dual look back overbought. So we should again be within 1 weekly bar of completing that high. And the daily momentums made a bear reversal a couple days ago. Is it the final high? Again, probably is. Need to trade below Thursday's low and close below Thursday's close to give us the initial confirmation that that reversal is complete. So just be aware that we're near the end stages of these, and this is a this is a classic blow off top of where amateurs are piling into the market near the end of a trend. And I can tell you what's called the smart money is exiting, and that's who they're selling to. They're selling to the amateurs in the final stages of these 5-wave trends in gold, silver, and the GDX. That's it for today. If you like what you learn, every day we update you in detail on these and a lot more markets in our DT reports. Check out a 1-month trial. Take care.